Before I should start the session, I will just explain a little bit about the Smart Finance. So this is Ranjan joining you from the Smart Finance Chennai, and we are a organization from 2005 to till date. So commercial applications have started in 2005. So we commissioned in 2004. There is a long journey. So we are basically a research organization, and our aim is to find out the new techniques of trading, or you can say to innovate new indicators for your decision process. So in this journey from 2005 to till date, lot of things we have innovated, and in this particular program I'm just giving you the glimpse of our 7 innovations, how these innovations has changed the life of the traders. So I have also told you during this process lot of things have changed. The data itself has changed, so we have to change ourselves to get the success in trade. So this journey we have identified many unique concepts, mathematical concepts. So in this you have experienced already 4 to 5 concepts. So now today you are going to experience another 2 concepts. So these concepts, whenever I say, so these techniques has gone out of the book and it has a practical utility now. So these are the things you have seen, and all our techniques we have put in the proper academic studies. So it is pictured in all our courses, and I have authored 6 books on the capital market. All my books also having these studies. So these studies are the essential of, or these studies are present in all our literatures, and using the same concept we have innovated many softwares, and all these softwares are very cost effective softwares, hardly cost 3 to 4,000. If you go for entire package it comes to 8,000, and monthly not even it cost you 400 to 500 rupees to adopt these tools and use these tools in your trade practice. So these are all our products you can see here, and besides that many unique concepts we used to conduct different webinars to teach the people how these concepts or the calculation modality of those concepts. So throughout the year we have programs. So 16th September to 24th September we have a program on the advanced WD-GAN study. So 9 advanced concept of WD-GAN you are going to learn in this session. So these are our products, services, our existence I have told you. So already you have experienced in this particular event how volatility is being utilized for intraday trades. So 10 days data cluster we have taken, from there we have estimated the volatility, and using this volatility and with the help of Fibonacci ratios we can do very good intraday trades. I have also told you how we can use the Gann angle method, the 11 trend line method of WD-GAN along with the volatility. Also I have told you the GAN natural constant. So though WD-GAN has spoken about that, we have translated that things into a perfect trading model. So where the golden mean crossover gives you a buy entry or sell entry, hypercycle terminates that cycle. And I have also told you that in our website we have given the free calculator for that. And yesterday you have experienced the pair trade, beta decoupling and Z-score, and it is a phenomenal day today. So Z-score has started working extremely well for the Nifty and Bank Nifty pair. So extremely well for the Nifty and Bank Nifty pair. So it is, these are the mathematical concepts never defined by the market. So market will obey it, will accept it, because these mathematically you are understanding through these methods, you are understanding the majority view in the market, what majority think about market. So if I say Z score says buy bank nifty and sell nifty, that means you are in the majority side. Majority of traders now in the buying side of the nifty or selling side of the nifty, so you are also going in the majoritan side. So that is what this Z score beta decoupling suggests. Then today you are going to learn using the VIX how you can predict the top and bottom of a month. So every month the top and bottom will form. So how you can predict that. So in this regard, if you just go to my YouTube channel, so you will get plenty of videos I have given, not for one or two videos. So if you just go to my YouTube channel and if you just go to for a search, so top and bottom, so if you just go for a search, you'll get number of videos how to use VIX for top and month. So it is 1 month before, 2 years before. Then so these are the videos I have given. So high and low time predictions and as per the GAN's method, but these are the 2 years before, as I said to you, 2020, and we have innovated this method how to calculate the top and bottom, not only for monthly, for intraday top and bottom also you can able to calculate. So in your free time, you can just go through these videos, you can able to understand all these things. So these are the, and I have given a series of videos in this playlist. You can say for a couple of months I have been given this in year 2020 post innovating this method. For prolonged period of few months I have published the video wherein I have validated, proved time and again that how these systems works. So today you are going to learn, and it is a very simple method. Suppose if you are going to predict the top and bottom for the month of August. For the month of August, if you want to predict the top and bottom, how you should proceed and what are the data you require. So this is the very important part. So what are the data first you need to predict this top and bottom. So this presentation already I have shared with you. So you can see here for top and bottom calculation with respect to the VIX, what are the modalities we have. So we'll be using the Fibonacci. So many of you will be knowing that Fibonacci retracement ratios. So these are the Fibonacci retracement ratios 0.236, 0.38 to zero point 0.5 till 0.888. So these are the retracement ratios used for trading and investment purpose. So this is also valid till the volatility is below 50%. Besides that, you have another set of ratios known as Fibonacci expansion ratios. So like 1.618 expansion ratio, how it has come? 1 divided by 0.618. So same process, if you take each ratio you divide by 1 divided by 0.236, 1 divided by 0.382. So you will get a set of ratios, and those ratios are known as the Fibonacci growth ratios or expansion ratios. And endless expansion ratios you will get, but we required only these expansion ratios till 4.237. So these ratios are going to help us for finding out top and bottom. So we are not finding out trading levels. We are finding out if the market is going up and off, what will be the maximum up can create. If it is falling down, what is the minimum down price point it will create. So we have to take the help of expansion ratios. Then how we predict the top and bottom. So if you see all these traditional way for predicting the daily top and bottom. We are taking previous day's top and bottom, calculating the price range, multiplying with this Fibonacci ratio, add to the low to get the tops, subtract from high to get the bottoms. This is what we are doing. You can use also midpoint and last traded price also. Weekly top and bottom, same way, previous week's top and bottom, calculating the price range along with the Fibonacci ratios, adding to the lows to get the top, subtracting from the highs to get the bottom. If it is monthly top and bottom, same process again repeat, take previous month's top and bottom, calculate. This is a traditional way where volatility has zero role, where VIX has zero role. So these are the traditional ways we are doing, and the accuracy of this particular, it is just like retracement, only ratio changes. Accuracy is 50-50. 50% it will work, 50% it will not work. So accuracy is 50-50 in this particular traditional methods. So how we should improvise it, how we should make it more accurate. So for that, we need to go with the VIX. So there are three distinct approaches for advanced way or in dynamic way, or you can say when we are following discrete random data model. Discrete random data model if you are following, or high frequency data model we are following. So we need to have three distinct approach. One, VIX based approach. Second is volatility based approach. Third is standard deviation with data stuffing approach. These three approaches we have to find out the monthly top and bottom. And in these three methods, we can use the cycles, Fibonacci ratios, all these things to find it out. In both the cases, 10 days data should be considered for calculations. So all these things are three distinct approaches. So VIX approach we will be following. When there is no VIX is available, we will be using the volatility approach or standard deviation with the data stuffing approach. So this is being utilized in all advanced computations. Normally these approaches, nobody, no books figures this, or no literature speaks about that. They used to think that stock market predictability with these higher mathematical concept is an insult to those mathematics. So many, though there is a standard deviation with the data stuffing approach is there, but for stock market, those who are doing a research, if you tell that can you do a prediction for me using this data, stock market data, they may not accept it. They'll say it is too small a job. So for that reason, VIX approach we will be learning today. So these are the very higher concept of mathematics. I will be bringing it down to a much easier understandable form. So what is VIX approach? We have to take the highest and lowest VIX in a specific time period. What is time period? In 1 month, previous month, what was the highest VIX? What was the lowest VIX? These are the two parameters I need. Suppose for August, top and bottom I want to predict. I require the highest VIX of the July. I require the lowest VIX of the July. So July months, this highest VIX, July, and July month's highest VIX and the lowest VIX I need. Then I need to identify the highest price and the lowest price in that time period. So in the month of July, what was the high of the Nifty or that particular instrument? What was the low of that particular instrument in the previous month? So previous month, 4 data I required. One is the highest VIX, second is lowest VIX, highest price and lowest price. So using these 4 data, I need to find out the monthly top and bottom. So after getting these 4 data, I have to find out the monthly VIX from the yearly VIX by dividing it by square root of 30. Directly I will divide it by square root of 30. I will get it the monthly VIX. So once I get the monthly VIX, I have to find out the price range. I'll be using the Fibonacci growth ratios to predict the top and bottom. So top should be calculated from low and bottom should be from the high. So this is also is one of the process you need to remember. So I'll just go for the July month's data, what it has given, and whether August, whatever we have predicted, it has worked or not, that I have to prove it. So if you want to know from where I will get this data, you just go for the historic VIX. You just go for the historic India VIX data. If you just Google search this, you'll get many website is giving. So I am going from this indexinvesting.com, which is also there. Yahoo also gives, everyone gives. So here you can just change it. So I required from the 1st of July 2023 till the end of July. So end of July I want. So I need 31st July 31st July 31st July data. So I required this data from July 1st of July to 31st July. So this data I required. If you just apply this one, so you will get all July data here, and you need not have to search anything. It has given you in the down. In the month of July, the VIX maximum has gone to 12.2550. VIX has come minimum to 9.8575. So these two values only we require. 9.8575 to 12.2550. So 12.2550, 9.85, 9.8575, 9.8575. So this is what we got. After getting these values, we require the Nifty values also. Nifty highest value in the July, Nifty lowest value in the July. That also you can get it through the same search. You can say that Nifty historic data. So Nifty historic data, if you go just search for there, so you can see here Nifty spot data we are going to take. So same process we are going to do here. So will be 1st of July and 31st of July. So here, so I'll be taking 7. So 31st. So this particular data, once you get 4 data only required for computing this top and bottom. So we have got it. Now you can see the highest value of the Nifty is 19,991.85. Highest value is 19,991.85. Lowest is 19,234.40. When it has happened, it doesn't matter. Where it is closing doesn't matter. You require these 4 data points. You got these data points. Once you got these 4 data points, your computation will start. Your calculation will start. Objective of this calculation is to get the top and bottom for the Nifty. So whatever VIX I am getting here, highest VIX, I am computing the highest price. Highest VIX I am combining with highest price. Lowest VIX I am combining with the lowest price. Why I did that? That also has a mathematical meaning for that. So that in your self-interest you can learn. So highest VIX and highest price of the month. Lowest VIX with the lowest price of the month. This we have from a set of data. Now this data we have grouped highest VIX, highest price, lowest VIX, lowest price. Now we will start the computation. How the computation will happen? Whatever VIX is there, we will be dividing it by square root of 30. Because it is per day basis it is being computed. 365 days is being taken. So if I square root of 30, if I divide, so I am getting a 2.2374, which is the monthly VIX. And this monthly VIX I am going to multiply with the highest Nifty value, because this is the highest VIX. So I am multiplying with the highest Nifty value, dividing it by 100. So I am getting a price range. 447.30 price range. So this price range Again, I am multiplying it with the higher Fibonacci ratios. What are the ratios I will take? I will not take retracement ratios. Retracement ratios are only meant for trading. They are not made for computing a top or bottom. Top and bottom can be predicted only through the expansion ratios, which Fibonacci principle speaks about. So we are taking all these higher ratios, Fibonacci ratios, which is known as your Fibonacci. So Fibonacci. So money has a value on holidays also. So for that, all money instruments we take interest computation, we take calendar days, irrespective of its working things. Irrespective when you are evaluating option, also you take interest rate. If anything you do, you take the calendar days into account, not the trading days. So fine. So we have divided 12.255 with square root of 30 to get monthly data. So here question come, if any month is 31st, can I take 31? You can take it, light difference will be there. Can I take 28 in case of a February? So you can take it, but standard you can make it as a 30 days. It doesn't alter your calculation in a great way. So anyway, you are not going to get a pinpoint top. That top is being made, it is not being violated. There will be a small deviation of 5 to 10 point will be there. So we have taken the VIX, highest VIX multiplied with the highest Nifty and divided by 100, you got the price range. So we got a price range here. So these price range we are multiplying with the higher Fibonacci ratios. So we got these ranges, and now we have to divide the bottom. So bottom has to be derived from the high. So high minus this price range. These are the bottoms for the Nifty. These are the bottoms for the Nifty in the month of August 2023, because this data is for July 2023. So this data is for July months 2023. So these bottoms are for August 2023. So now it has come to, this is the first bottom broken, then we will go for second bottom, then we will go for third bottom. Then I have taken the mid value of these two bottoms. So here higher ratios we are using. So for that I have taken the mid value of these buttons, means whatever the two bottoms are forming, so that added divided by 2. This mid value also holds good. These are the original calculations, original derivations, original subtraction from the high. Then whatever the calculated values are there, you are just taking the mid of that. That also proves sometimes true. So these are the calculations you have done in the beginning part of the August month. So July ends, your calculation is ready. So these are the bottoms will form. These are the tops will form. So tops, how it will form? Same process. Lowest VIX with the lowest price. Take the monthly VIX. Take the price range. Multiply with the higher Fibonacci ratios and add it with the low. So 19,234 low, which is formed in the month of July. So that has to be added. So after adding these things, you are getting all these tops. So these are the top calculations, these are the bottom calculations. So top calculations you have seen here, top calculations and bottom calculations here. So these are the calculation we did the beginning day of the or the last day of July. So here after doing this calculation, most of the time we found out that most of the time, and if you just take a study you'll find out, so most of the time the top or bottom concentrate at point 1.618 to 2. Sometime if a higher volatility is there, 2.618 also proved to be a point. So these calculation points what you get, so here the bottoms will be validated. If this bottom is being validated or not, closing basis if it is following that, then it will go for 19,182 or 19,097, or else most of the cases the reversal will come from here. So this is the bottom. Top also same Fibonacci high ratio 0.618 to 2. These are the levels we should have a reversal. If higher volatility is there, volatility is above 20%, 30%, you can go till 2.618. Majority of cases, even the time of corona, the time of corona, that time also 2.618, from here the bottom is formed. So monthly top and bottom calculated. Now till date, what it has given us till date, what we have got in the month of August. If you are following the Nifty, you'll be finding out in the month of August the high is 19,796, low is 19,253. So here nobody can dispute this figure. This are the two things has happened in the market. So as I told to you, 1.618 top, 19,794.49 is your calculation. You achieved till 794, that is in the first day of the August. Then market started correcting, and corrections has taken a great number of days. It has corrected to 19,274, again bounced back, again fallen. Now recently it has come to 19,253. So 19,253. So you can see here 19,253 it has come. So here to also bounce up, and at same point 1.618. This is the exact low happened, not on that day's closing. So that day's closing is not that. So you can say that this particular low when 19,234 happened. So 234 happened 19,234. This is July month. If we are going for the month of August, so this month. So 1 month data if I can take it here, or August month data if I can take here. So if I'm taking from the 1st August to till date, so 01. So 1st August to 23rd August, if I am just getting the Nifty data, 1st August to 23rd August, so till 22nd, so 23rd August if I am taking here, this is the value happened 19,795.60, 19,253.60. So this is the high and low happened 253.60 when it has happened. So 253.60. So this low we can here 18th August it has happened. However, 310 it has closed on that day. 310 it has closed. But see the approximity of these values. So the bottom calculation was 19,268. It has achieved till 19,254. So here bounce happened. If it has penetrated in the sense closing basis, if it has closed below this value, then the next bottom should be 19,182 or preferably 19,097. So this should be the bottom, and the top has formed in the first day of the August, so that all of you have seen it. 94 and 95.6, hardly 1 point deviation has come. So this is a very simple calculation. Month on month basis, try to test it and see how many months it has proved correct. You'll find out more than 90% of months, these top and bottom calculations are perfectly validated. Now question comes, how I should use it? What is the use of this? You have told me this is the top, this is the bottom. Then what way it is going to help me in my trade? That is very important. If you want to use it in trade, if you are an option trader, if the top is formed here, then you can think of selling some call options. Or top is being formed here, you can sell the future and hedge it with some call options. Take the benefit of that. So if the bottom is formed, so bottom already the calculations are saying that it is a form 19.268. So top earlier it has been found, top has also reversed from that 1.618. So bottom also is probable to reverse from this 1.618. So you can buy it here along with the put options and wait for a higher target. It has multiple use. So how you can utilize for the trade? So if this information comes to your hand and if you start little bit thinking on this, you can get wonderful result out of that. Wonderful result out of that. So not only that, the same concept also works for the intraday top and bottom. Similar concept. Similar concept also work for the intraday top and bottom. So those who are using our software, Smart IT software, there we have given intraday top and bottom also. You can able to compute the intraday top and bottom for a particular counter using this similar kind of method, same kind of method. So this also we used to say when the third top crossover happens. So here, so whatever the VIX based top and bottom for the Nifty I have told, we have given that also here. Nifty based top and bottom, if you just click here, you can able to get the Nifty based top and bottom here. So you can see here. So top and bottom, find the Nifty top and bottom. So if you, whatever calculation we did there, the same thing will propel here. So previous month's data, so the same 9.85, 12.25, this is the low, high, this is the calculated thing. So here the reversal happened. Then it has come to 268, from here the reversal happened. So reversal happens means from 19268 it is going up. Now it will find out a hurdle at 544 to 619. Bottom reversal happening, top reversal happening. So these many ways you can use it. So this tool we have given there. Along with that, same concept how you can utilize for intraday top and bottom, that too also we have given. First cycle, so here I used to say whenever the stock or any instrument crosses the first cycle, then on that day the seventh cycle, even seventh cycle is a great probability. You will definitely get the seventh cycle. That is also based on the volatility concept, intraday top and bottom. Similar concept, similar concept, similar Fibonacci ratios. So that also video I have given in the YouTube. So versatile use of the volatility, what I want to convey here, you can use the VIX, you can use the volatility in various ways. So one way you have seen how to do intraday. Using the VIX, I have told you how you can calculate the monthly top and bottom. Few days before, I have released another video. I have explained using VIX how you can find out how much high and low difference it will create, the depth market will create in a month. High and low difference is depth, how much depth it will create in a month. So those who have gone through that, they knew that this month we have expected 579 point of depth, 579 point of depth. And what we have achieved here, what we have 579 point of depth we have expected, we are achieving 542 point of depth till date. Almost 80-90% we have achieved. 80 to 90% we have achieved. Many months, January to so far, this depth, whatever we have estimated, the market rewarded more. This month it is rewarding some 20 to 30 point less. Time is there. If there is a rally happens and it goes above 795, that also can be filled. However, so far we have estimated 579 point, we have got 542. So these are the versatile use of the VIX. VIX can be utilized, again I will summarize, VIX can be utilized for calculating your monthly top and bottom. Monthly top and bottom. VIX can be utilized, number two use, to know the depth of the month, high and low, how much depth it will create. So through that high and low depth, you will come to know what is the probable high is going to happen, what is the probable low is going to happen exactly after the first day of trading. first day of trading is over, you can calculate what is the high is going to happen in that month, what is the low is going to happen in that month. So if you find out that, you can form wonderful option strategies. So this is the second use. Using the VIX for the Nifty, you can get the intraday top and bottom also. So same, if when the VIX is not there, you can use the generic VIX and create the intraday top and bottom for all stocks. So intraday top and bottom also you can able to find out. So if you know the intraday top and bottom in a day, third cycle, fifth cycle, seventh cycle, once the first cycle crossover happens, definitely probability of that day to touch the seventh cycle will definitely happen. If the first cycle bottom is crossed, then seventh cycle bottom also will happen on that day. First cycle top is crossed, seventh cycle definitely is going to happen. Bottom is crossed, definitely the seventh cycle bottom is going to happen. So you can form a straddle, you can buy at this point with the hedgings, many things you can do. So these predictive algorithms or these predictive studies are highly essential for becoming a successful trader. Highly essential. Small calculations, though these calculations are being innovated in a very difficult way. However, to make it use or to use it in your trade, you need not have to put that effort of research. You simply follow these calculations, that is enough. That is enough. So you have seen how we have calculated for August, how what happened in August. So that is a proof in front of you. It is a white paper proof in front of you that yes, this is what we have calculated, this is what it has achieved. If this calculation you do at the end of August for the month of September, so you will definitely try to enjoy that. You will find out that okay, 1.618 here only my bottom is forming, my top is forming, so my strategy will be like this. I can form a butterfly here, I can form a Christmas tree strategy here, I can form a straddle here, got here, condor here. So all things you can able to do if you have this calculation on your hand. And these are the small tricks to make you successful in trades. Market always provide you enormous opportunity. Only fact is we do not know how to utilize that opportunity for our profit. Majority of trader, why they fail, like your SEBI data says, SEBI is telling out of 10 traders, 9 traders fail in the F&O trade. 9 traders. It is official now. Officially it is declared 9 are fail out of 10. Imagine in a school, if 9 students are failing out of 10 students, to whom you should blame? Is it for the school's fault or students' fault? School's fault, because they are not being taught how to utilize their education, how to study. So school fault comes when they do not teach them properly how to study, how to write exam. So student fail. So it is, if you think this is a school, majority are getting failed, that means majority do not follow a valid scientific study. And it is a fact. How many of you, if I ask a very simple question, how many of you, you are in now 50 people in this room, every day, how many hours you study about market? Forget about trading. I did 100 trades. I am 10 years in market. I am 20 years in market. Your experience doesn't count here. How many of you study mathematically? Can this stock will be calculated? We can calculate mathematically. Is it possible to calculate or forecast this bottom, forecast this top? What are the ways to do it? So how many of them you are consistently study? Yes, maybe today is a program, you are in program, but tomorrow that consistency is lost. Trade is over. We enjoy our life in the television room. So that is very important. 99% of the traders, they never learn post market hour. There is no homework. What is homework of a trader? Can anyone will define? Tomorrow the market is going to open. What is the homework of a trader? If you are an intraday trader, did you find out is a selection of the stocks in a scientific way? What are the stocks I am going to trade tomorrow? Did you figure out what are the stocks are given a technical breakout, even though if it is these concepts are new? Whether you marked it that which are the stocks has given a 5 days moving average breakout, 10 days moving average breakout. Does this homework is being done well before tomorrow, before the market starts? Whether it is documented in my note, whether my profit and loss is being documented, that is not there. My profit and loss is not documented. My study is not documented. My activity is not documented. What I did today, that is not documented. So how can I get the success? Can you see that one student goes to a school, only a bag, no notebooks, nothing is there, no pen, no paper, no book and no notebook. So he is going to school to study. Is it possible? No. Same process. If you are going to office, can you say that? No, I will go to the office. I will not have a pen. I will not look at the files. I will not open the computer. I will not open the laptop. But I will work there. What work you will do? Anybody goes to office, there is an activity, it is chalked out for that. He will reach the office. These are the files he has to access through. These are the activities he has to perform. He has to call to his customers, he has to attend certain queries, he has to solve specific problems. These are the activities he has to perform. It is well planned. Every business has a plan. Even a small petty shop keeps an account. How much he has sold today, how much he has given, how much new stocks arrived, everything is accountable. But 99% of trader doesn't have an account. Whatever lost. No account. Why he lost, he never investigated that. What study he is using, he doesn't bother about that. Only morning I have a software, I will open up, it will pop up the red blue lines, I will enjoy that. That color games we will play, and day end we will go home. That is not the way you should do trading business. Trading business is a most sensitive and rewarding business. It is not for fear. It is, take it as my things, there is no business, no profitable business exists in the world other than stock market trading. It is a instant profit giving business. It has that capacity. So instant profit giving business means it requires some serious studies. My calculations should be done in such a way that market should accept. This calculation done in the July end, entire month of August, it is accepted by the market. You do for the June, you will see the same result. You do from the January to June, every month you will see the same result. These calculations, what you do based on the week's estimation and the high and low formations in the previous month, entire month market obey that, accept that, oblige that. So then if you have this information and if you trust on this information and initiate your trade as per these data points, where is the chance of failure? Why you should fail? Reason is we do not have a right knowledge to trade. That is why you skill yourself in this. Within few months your life will change. That I can give you a guarantee. If you follow these principles in your trade, top calculations, bottom calculation, intraday top calculation, monthly top calculation, weekly top calculation and bottom calculation. I have given you one example. You can do for weekly, you can do for 15 days, you can do for intraday. So if you go with this particular calculative mathematical way, in the first month itself your trading life is going to change. It will change. Nobody can stop you for making money. You will make money. So that experience will change. That is what I wish to convey here. These research has the essence to change your entire life. It will make your trades joyful, happy. That's why we use our logo. Stock market made easy. Smart finance based on a concept, make the trading easy, make the market easy. So this is one of the predictability algorithm we have learned. Second, I am going for zero loss option strategy technique model. This also you require the volatility study. So what you want to do here? Calculate the monthly volatility from the past 10 days spot data. Calculate the monthly price range. Take 1/3 of the price range and form 2/1 long ratio call and put spread. So buy a call strike, the price range or reference price plus 1/3 of the price range, sell a call strike 2/3 of the price range. So by this process you can form, and there is a stringent rule for profit booking. If you are in the first week of the settlement month, any time the spot moves to the buy and sell mid strikes, you should book the profit and come out. If you are in the second or third week of settlement, book the profit near the sell strike. The last week of settlement, do not take for the current month, go for the near month. And this I have created a, though regulatory things doesn't allow me to share these studies with, you can see how many proofs I have created. It is not from 2020 to till date. So enormous proofs I have created, and enormous times, number of times I have taken this particular methods into your means webinars and other things. Every month and month basis I have created these things. You can say 1st November, 1st October, September. So I have created the same logic what I have given here for entire 1 year period. Entire 1 year period. December, it is November 2019, so 18, so December to December 2018 to the November 2019 I made it, and November 2019 I made it, and many times I have made it, not like that one time only I made it. So many times I have made it, and this proofs also I document it. So document it all these proofs here. So if it is document it all these proofs here. So here all these entry rules, exit rules, whatever is being given here with one lot of Nifty 2018 November to November to 2019 December 19 December. This Excel is picturing this one December with one lot of Nifty trades. It has given this strategy, given 1,33,556 without factoring your brokerage and taxes. You take brokerage and taxes 40% out of that. You see how much it has given. One lot only one lot, and nowadays margins are less. Hardly it will take near to 1 lakh to 1,25,000 margin to initiate this. What we are doing, buying one lot of call and put options based on the volatility logic, selling two lots of call option and put option based on the same logic. However, choice of these strikes is based on the volatility. How you will do it? This is the potentiality, not only for 2020, I have proof till 2023. But here I am showing you this Excel, but unfortunately I cannot share this Excel with you. The reason is your regulatory hurdles. So there is a gray mark will be there, so that we cannot able to experience these things. You can, though we have our tools now, you can utilize the tools and get it. What is the process? Say we are in 23rd August today. So today Nifty has closed. Where the Nifty has closed, tomorrow suppose you want to initiate this thing. 19,444. This has that, I told you what is the promise this is having. So 19,444 Nifty closed today, 23rd of August. Tomorrow we are going to initiate the trade on this. However, this cannot be done. Tomorrow we are going to initiate this trade. However, as per the rule, it is we are in the last week of the settlement. We have to move to the near month. Second, whatever is our capital employed for this strategy, what I said, this strategy take 1,10,000 to 1,20,000. The moment we will be realizing 1.5% to 2% profit will come out. When we should book loss, if after initiating the strategy it moves to the mid strike, will come out. Third week we have to go to the up strikes to book the profit. So how we should choose a strike, it is very important. So that is the only to choose that strike is the only one clue to be successful in this. So here what happened, how we can make a choice. So there is a Saturday Sunday falls. So 18, 19, 20 is Saturday Sunday. So in India, I think Hitul ji, you'll be knowing that. So 18th was the last trading day. Then 1920 is a holiday. Then we have come to 21st and 21st and 22nd. Or I can change the data if you want that data should be taken, or if data is wrongly taken, 18, 21st and 22nd, 1920 holidays. So this is 18, 21st and 22nd. So here date punctuation is the error, but data is correct. Data I have taken correctly from here, 18, 1920. So here 18, 1920, 21st and 22nd. 21st and 22nd, I think little bit of tweaking of this data I have to do. 21st and 22nd. 22nd data is correct. 399 is there. So 8, 9, 10, or once more let me take. So here, so this is the data points here, 18 to 21st, or we can just take it from the NSE site. Why to this one record to hunt and find out, it is very difficult. I'll just go to the NSE site, and from there I just want the or from here itself I can take, right, to go to NSE site. This also uh, I can take it from here. So I required some 18 to 20. So take some extra days also. So here I'm taking this extra days, just copied it, and I'm going for a new Excel sheet page where I can just paste it. So now I have to sort it because they are in the different order. I need in a different order. So sort it from the, so any, so this is A to Z, it is there. So Z to A, make any alterations. So it will, sorry, all data is not altered here. So you can say once more, I have copied it. So here this data points, I have to expand selection. It's not happening. So it is little bit of this, one step ahead. I will be moving these particular things 9th, and I'll be just stopping here 23rd of August, and 23rd August data also I required, which is 19,444. 19,444. 19,444. So my data part is over. Now what it is giving? Volatility. It is giving the volatility. After this volatility is computed, I am getting the price range. So this also monthly volatility, not daily volatility. Monthly volatility, I am getting the price range. So price range is 367. So first what I have to do, I have to take 1/3 of this price range, which is 122 points, and add it with the 19,444. So this gives me the strike of buying is 19,566 above or slightly below. And here I'll be subtracting the same thing here, 122 points, 19,321. This is the buying strike should be near to this. Selling strike, again 2/3 of this value, 2/3 of which value? 367, 19,811 and 1976. This is what raw calculation came. Now we have to decide on the strike. So which strikes call should be bought for the September? This is monthly options you have to take. So monthly options, not weekly options. Suppose if you want to initiate this trade, you must buy 19,550 call option, one lot, and that too for September, by September, because we are in the last week of August, and sell 19,800 call option of two lots for the September. So this is one part is over. Second part, we have to 321 it is coming. So what we have to do? 19,300 put options we have to buy one lot for the September, for September, and we have to sell 1976 it is coming. So nearest is 1950, 19,050. Put two lots we have to sell September. So this is only 2/1 short ratio spreads, or you can say this is Batman strategy. So whatever name you want to give it. So these strategies if you form, this is a zero loss arrangement you made, but be careful, once it is a zero loss arrangement, it has to be followed properly. But how to follow it, that is important. Now strikes have chosen 1/3, 2/3, strike choice are being made. What action need to be taken, that also is being decided. Now this trade is initiated. This trade will be, you will be quitting this trade or booking the profit at two price points. What is that price point? 19,300 and 19,050. So there is a difference of 250 points are here. 250 points. So 250 points are there. Mid is, so 250, 125. So if you subtract 125 here, half means either you add 19,550 and 1950 plus 19,300 divided by 2, that you can do. And in that, if the spot falls to that level, means it is coming to 175, 19,175, you'll be at a small profit, book it and come out and again reform. After coming out, don't stop, again you form. That tendency, that process, let it continue. But if you are in the first week of settlement, means now you are in the last week of August, so you are very early to the September already series has not started, last week of August is pending. So in this case, if Nifty fall to 19,175, you book profit. Same process here, also 250 point, 125. So 125 point you add here. If the Nifty spot climbs to 19,675, spot, not future, 675, book the profit and come out. So there are two price points, 19,675, 19,175. If it happens quickly, you come out. If it doesn't happens, wait, profit is going to increase. If it happens, you will come out with a smaller profit. If it doesn't happen, you will come out, wait, you will get a higher profit. Why it gives you profit? Because here theta plays a bigger role. The theta what you have maintained by this process of initiating this Batman strategy, the theta is, you have balanced the theta at 5 rupees. So you will be gaining as long as the price move to the mid of this strike. The moment it move above 19,675 or fall below 19,175, the delta addition will happen in these lower strikes. That will kill your profit. Before that, smaller profit come out. If you are in the first week of settlement, if you are in the second week of, if it is range bound, you are wonderfully you can calculate the things. So 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 here wonderfully you can able to calculate the, get the profit if it is a range bound market. If it doesn't go to 675, neither comes to 175, you just keep waiting there, profit is going to increase. Profit is going to increase. So that is what you have to follow. If you are in the second week or third week of the settlement, don't come quickly, because that is, you are in the last phase of settlement. Only quit if the price comes to 19,800 or 19,050. So only quit at this point of time. So this also you have to remember. So this also you have to remember, and this also is required to be a good trader in this particular system. So this particular system, if you want to use, you must follow, these are the decorums of entering and coming out. Entering and coming out, these are the decorums is required. Without this rule, it will become a loss making trade. If you do not follow this rule blindly, the way you follow the trades nowadays, by watching the movie, by watching the television, then this will be the, this will land in losses. So land in losses. So that also here, December, January, we got one chance. So January, December 2018, we got one chance. January, we got two chances. February, we are getting two chances. You can say 6 February itself, we have got this thing. If you would have kept it, it would have landed in loss. So once it comes, we come out and make three chances, 3 to 4 chances it has come in the February. March, it has given 3 chances, 3 to 4 chances. April, it has given 2, 3 chances. 3 or 4 chances. May, 2 chances, 2 times we have made. So what we are doing here, the moment it comes to that level, what we are doing, it is very simple process. I'll again summarize this thing. What we are doing here, past 10 days data, when we are going to follow the strategy. So tomorrow you are going to do, means today itself you do the calculation and make it ready tonight itself. Tomorrow you have to take a chance. Suppose tomorrow there is a huge gap of, change the value, change your strikes. So what happens? So tomorrow you are going to enter, or tomorrow 3 o'clock you are going to enter. At 3 o'clock, put all these values, 23rd data. Instead of that, you take 24th August data, one old data, take it out. Take the monthly, so variance, so logarithmic process, it gives you variance, then it gives the square variance, then you are finding out the net variance, then you are going for the volatility and square root of 30. So 30 days is required, monthly volatility, monthly price range, 1/3 of the price range. So you are adding this 1/3 of the price range, 1/3 of the price range you are adding to the last data what you have taken. That will be your buying strike. Same process, if you subtract, that will be your buying strike of put. Then whatever remaining 2/3 is there, that 2/3 you are adding to the buying strike and getting the selling strikes. So what you are telling here, based on the volatility what is expected, I have covered everything. So instead of this volatility, if you are going for monthly top, you are finding out, say monthly top you find out, monthly bottom you find out, as I said 0.16618. So there itself you buy monthly top, monthly bottom, you can buy higher strikes, you can sell. That also you can do. Once you are finding through the weeks, finding a depth on the first day. So based on the depth, you higher price and lower price you can buy. Next higher and lower price you can sell. That also you can do. So many ways you can do it. There is not the only one way, but this is one of the successful ways. So once you initiate this trade, decide the strike, initiate the trade. Once you initiate the trade, exit rule is very important. because you have just made a zero loss arrangement. Now exiting is very important. So 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 exiting is very important. So where to exit? Exit means buying strike and selling strike mid. Selling strike mid. So here you have to exit. That is what you have to do. So after post exiting, do not quit the trade. Again, find out the strikes and enter. 2-3 times you can get. So in a year, whatever this old record I am showing you for 2018-19, in a year 33 trades it has given, 21 I think 33 or 34 trades it has given, 34 trades it has, totally it has created 34 opportunities. So 34 trade opportunities it has created, 22 then after many are there. So 34 opportunities has created, 34 opportunities it has given you near to 1,33,000 in one lot. This one lot means I'm talking about this one lot sell, two lots buy, sorry, two lots sell, one lot buy. This is one strategy. This action, this is one lot buy, two lot sell. This one action in a year 33 times it has given you the money of 1,33,000. Volatility what you are getting in the NSE side, it is based on past 365 days data. So current 10 days scenario is different. You are not going to hold this trade for coming 365 days. You are going to hold for 5 to 10 days. Monthly 3 opportunities will come. So here your holding period also smaller time. So there it will say 15% volatility based on 365 days data. Because earlier it would have happened the swing. Now it is only 6%. So if you follow the NSE variables, you will get similar kind of result. If you do this little bit of work, your return will be different. So that is choice will be yours. Calculations should be done. This Excel already I have given in your group. There is nothing. This Excel first day of event itself I have given in the group. Those who have asked also I have given, the first day of event also I have given. So you can, if you are a member of this group, first day itself this Excel sheet is being given. See here, it is given. If so, it is given here. PPT, Excel, everything I have given. So only thing is that you have to work on that. Your old report I am showing you. I have the report for till 2023, but I am compelled, I am forced to not to show. So that is why I am showing you 2018-19. That too also I can show, I cannot share this because it will be considered as a instigations for trading. I am instigating you to trade, so that they will consider. So there is a rule, when the king itself is blind, there is no need to argue. So when the king is blind, the law is blind. When they say you should not say this kind of things, so we should follow that rules. So that is what I am following. It has a promise, it has a risk also, it has a proper procedure to enter and exit also. That I have told you. What is the procedure to enter, what is the procedure to exit, and that is must. You should not defy that, because gap up actions will be there, gap down actions will be there. So that time this trades accordingly you have to exit. Anybody? This is 7 innovation of the smart finance. If you follow judiciously, these are all these informations are in public domain for years. If you follow these 7 innovations of smart finance judiciously, religiously, these 7 innovations are enough to make you a successful trader. Enough to make you a successful trader. Only thing is that you require a consistent approach. If you are following this, follow this. Do not have a split mindset. No, here 2000 is coming, can I get a trade which can give me 20,000? So the many, to get that things in 20,000 you will lose more. So Yes, you have to recalculate. That is what Vinodji I have told. After you book the profit, recalculate, change the strikes, and enter the new trade. Logic will be same. Logic will be same. So you can add these things. The new files, what is required for this thing, I'm adding these things here. So Excel given, sent it. So you can, if you're a member of that group, you can download from that group itself. 1900 people are there. So if you want to be a member of that group, you can take a lot of information you will come to know. So this is the way we can share a document. You can download this document. So lot of new things you have learned in this particular event.